Good morning. Welcome to the TreasuryONE weekly update video. I'm Cilliers, Head of Market Risk at TreasuryONE, and joining me again today is Cilliers, Currency Strategist at TreasuryONE. So, Andre, the big topic this week is obviously US elections that's coming up and being done this week. How will that likely impact the market as one of the key drivers?
Well, we've had a record number of postal votes this year due to the COVID-19 and people being scared of actually going to the polling stations tomorrow. And Mr. Biden is, in the national polls, a clear winner. And I think we are seeing some reaction to that. However, it's being cautioned by everybody that the national polls is not a prediction of what happens in the electoral college. And it's too difficult to call at this stage in key states like Texas and Florida, for instance. Biden needs to win those in order to lock in a presidential win. What can we expect? Well, I think if we have not a clear winner, then we might even see that the election results are being challenged by Mr. Trump. I do not think that he will, in the event of a loss, go out easily and quietly. And that could cause some chaos in the markets if that were to happen. If we have a clear case winner in the event that it might be Biden, I think we will see markets reacting quite aggressively, and we will see a weakening of the dollar, a strengthening of other currencies. And the event of Mr. Trump winning, obviously, the opposite. I think markets will rally, stock markets will rally. I think the dollar will rally. And that would be negative for the emerging market currencies. So what am I really saying? Look out for a week of extreme volatility, and it will start from tomorrow onwards. And hopefully by Wednesday, we will have some more and further clear indication of what actually happens there.
Just stepping away from the US election for a moment now, we've seen Brent crude oil come under pressure in the last couple of trading sessions. This morning dipping below a key level of $36 a barrel, but picking up its head again, trading just above 37 at the moment. What is the reason for oil being under pressure at this stage of the fight?
Well, I think if we look at the oil price, it's simply a matter of supply and demand. Supply is on the increase. It's been on the increase since the last round of talks between the OPEC countries. The price was at levels where it was worthwhile pumping oil, and they've increased their supply. And at the same time, we've had COVID-19 jumping a couple of surprises on us with absolutely massive increases, especially in Europe, also in the United States. We've got further lockdowns. We've got lockdowns that kicked in England over the weekend that will last into December. And that obviously has got a massive impact on the demand side. So the interesting one there is that the lower the demand, then and the supply continues to be on the increase, we will see a decline. But that hangs together with also declines in economies as such and a slowdown in expected world growth because of the increases in the COVID-19 levels. If that continues, we could expect the oil price to come under further pressure, which would be cause of happiness in South Africa in terms of petrol prices that could come down. That would have a positive impact on inflation figures, and that could eventually have a positive and further impact on interest rates, where we could see a further decline in interest rates if that continues.
Fantastic news for the South African consumer on that front. We've already seen that we're probably going to have a best Q3 current account surplus in South Africa with the declining imports. But other data releases that's of importance this week is US non-farm payrolls that's coming out on Friday. How do we think that's going to play out?
Well, that's an interesting figure. We have to see how that gels out, because we have now seen that the economy is picking up in the United States, and there was further activity because of the election, and lots of money was being spent on that. But at the same time, they could not agree on a further stimulus plan. If you look at the checks that was posted to the American consumers during the last round of stimulus, that money has all been spent into the economy. The job creation came from that. And now we've seen the increase, and I refer back to the COVID-19 increase cases again. That could have a severe impact on the creation of jobs. So we could most probably expect that we could see a little bit of a negative number on the non-payroll side due to this, and that could prove also be rather negative for the dollar.
And then just last thing, touching on the currency. Dollar rand, we've seen it trading into a downward wedge with the 16 rand level coming in as key support currently, and the top side being capped around 16.75. Do you expect we're going to continue trading in those ranges for an extended period?
That's a difficult and interesting question. It would be my prediction that if Mr. Biden wins, that we will break the 1604 level, and we could very well see the rand trading below the 16 level. But I place the reason for that solely on Mr. Biden winning the election and becoming the new American president. If that does not happen, I do not think that that will be broken. So I think we as South African companies and managers of exchange rates should be very, very cautious this week in what we do and how we look at the exchange rate. If you have very, very short-term commitments that you need to pay, I would really, really look at taking some forward cover, or at minimum place a stop loss. On the upside, even if Mr. Trump wins, I do not foresee that we will break out of the 1675 level. And then people need to, on the exporter side, place orders in the event that it comes out that he wins, for that pullback towards the higher levels, to get some orders done and get some forward cover. So on the very, very short term, my concern would be at the 1604 level as a breakout due to a Biden win.
Thank you so much for your time.
It's a pleasure.